Hello, everybody. Welcome to MoneyWi's Wednesday. My name is Kelly Walter, and I'm here with my better halves. My thirds. Would you like to introduce yourselves?
My name is Kelly Merck.
My name is Andre Harris.
And both of these awesome people are community development managers, both in the Florida over here and Georgia markets. And we are all three also certified financial counselors, which sounds super fancy, but doesn't necessarily mean that we know everything about everything, but we certainly know what some of our members experience. And that's why we wanted to bring this topic to you today of from split to stability. So we understand that there are financial challenges that can come with divorce. And there are certainly emotional and practical and financial impacts to that. And we wanted to cover this because it's something that as financial counselors, we work with folks who are struggling with this. And we're hoping that there's a larger audience out there of members who could use some of the things that we've learned that are working for some of our members as they learn to bounce back from divorce. So that's what we're talking about today. So we're going to jump right in because we have a lot to go over and we want to make sure that we keep this within time. And so I'm going to start by, you've heard the cliched statistics, right? That half of all marriages that end in divorce are usually from money problems. And there's really no like hardcore evidence on that data, but we have found though that financial disagreements are certainly a significant contributor to divorce. And there are estimates out there suggesting that anywhere between 20, 40, maybe even 50% of divorces can be attributed to money problems. And we certainly know from working with members that that's usually the case, unfortunately. But we also know that post-divorce, that doesn't necessarily end, especially if there are children, that minor children that are still involved and there are still shared expenses. It's just a big mess sometimes. So we know that divorce doesn't necessarily mean that those money problems go away. Sometimes they're even maybe magnified or even worse. So we want to shine a spotlight on this topic today. And we're hoping to give you a little bit of hope and encouragement as well with some next steps on what to do if you find yourself in this situation or know that you are approaching having to make some plans for a separation. So let me start off by tossing you guys a couple questions. Okay. Andre, I'm going to start with you. Okay. I'm going to pick on you since you led the last one. And
sounds good.
Sometimes you don't share your questions with us. So I was nice to these guys. I told them ahead of time what questions I was going to ask them. But sometimes he throws a curveball at us, but I'm not going to do that to you today. So Andre, what would you say would be the first step that someone should take to reassess their finances after divorce?
Well, so after divorce, you're kind of picking up the pieces. And I do want to preface this by saying that none of us have been divorced.
Oh, right. I forgot to say that. Thank you.
We're not experts on this topic, but we have certainly counseled people that have gone through this. We have friends and family that have gone through this, but a lot of post-divorce is picking up the pieces, right? And so what you want to do first is just take a breath and kind of assess your situation. So you want to know, okay, how are the bills getting paid? What was getting paid? Who was paying those bills? What does my income look like now as a single individual versus what it was when we were married, right? Yeah. And so now at this point, you're going to have to figure out, hey, how am I going to get this done, right? And a large part of that is building a budget, is rebuilding a budget, because you may have had a budget before, maybe you didn't have a budget, but it's really going to be crucial right now to go with the budget and figure out where everything's going. Yeah,
that's really good. And I appreciate you mentioning our perspectives on it. You're right. We are 3 certified financial counselors, but none of us have gone through divorce. So we are not speaking to you today from personal experience. However, we know people, sadly, who we've had to walk through that journey with, both as professionals and in the real personal world. So we can add some insight. So our opinions today are not necessarily of Envision Credit Union, but maybe even just us as individuals, but also as wearing our counselor hat. That's kind of the things we're bringing to you today, is that exposure that we've had from that. So yeah, very good. Thank you for answering that question and bringing that up. So Kelly, how can you or how can creating, he mentioned a budget. So how can creating a post-divorce budget help people feel a little more in control during a time in their life where maybe they feel like they're kind of not?
Yeah, sure. So this may sound a little cliche, but knowledge is power. If you know what you're working with, it kind of gives you that control over something in a situation that might be totally out of your control. This is something that you can control, and it's going to be something that you can build on to help you. Like Andre had said earlier, when to know where your money's going and what you're spending it on, to have it written down and you can look at and you can say, okay, this is what I'm dealing with, and this is how much money I have coming in. This is how much money I have going out, and it's black and white. There's no guesswork involved. It's these are your bills, and this is what you're going to be working with, and what can you do to help yourself. So even if you're not going through a divorce, a budget is the greatest thing ever for your financial well-being. But especially going through a divorce, that's one of those things that you just want. It's the little thing that you have a control over, and it helps control the stress levels and everything else. It's the core of everything that you're dealing with.
Yeah.
And can I piggyback off that real quick? One thing that just came to mind when we were speaking to that is establishing, is my lifestyle going to change, and what is that going to look like?
Right.
And having that budget is really, really going to help you kind of figure that out and see, okay, now that this union is over, and now that I'm going through this, on my own, what does my lifestyle look like now? And can it stay the same? And if not, then you're going to have to make those financial adjustments.
Right.
It's a really good point. I think another thing that's really important to talk about is the reality of how amicable the situation may or may not be.
Yes.
So a lot of the things that we talk about today are if there are two willing and able parties.
Right.
But we also know that in an unamicable situation, there could be dissension still between couples. Maybe you're asking for something that's in your favor, but it might not be reciprocated, or it might not be granted. And we'll talk about what that means. We'll talk a little bit about shared loans. We'll talk about shared bank accounts. And so I think that's also one of the first steps when you're looking at your individual household budget now, if you're paring down from two incomes to one, what that looks like. But also, these might be your goals, but you have to be realistic as to what you think you may or may not be able to agree on with the other party. Hopefully some of this stuff is talked about if you're working with an attorney. I know divorce attorneys often have support in these areas, and that is part of mediation. That's part sometimes of court orders where there is discussion about, and it's agreed upon. But oftentimes we have found that even post-divorce, once the documents have been signed and sealed in the courthouse, there's still challenges with some of that. Yes. Even as simple as when the kids need braces, who's paying for that? That might not have been in your divorce papers. Like, you might not have had to talk about that then at the time. But
or who's paying for after school?
Right. Who's paying for aftercare and all that. Yeah.
But even if it is discussed in the divorce papers, it might not work out that way.
Right.
So that's something that you have to plan for as well. That's where emergency savings come in, and we'll talk about that. But just because it's in the plan doesn't mean that other person is going to follow through with the plan.
Yeah. No, that's really good. There is one, we talked a little bit about, let's talk about that actually. Okay. I'm going to talk about that right now. Okay. So, because I feel like it is one really huge misconception with divorce is, well, in mediation, we agreed that this loan would now only be in her name or his name. Mm-hmm. And the judge signs it and says, yes, that's what you guys have to do. But then later the member comes in and says, I need to take my husband off of my loan. And they realize or my ex-husband or my ex-wife off my loan. And they realize it's not that easy. No. You can't just remove somebody from a loan or a bank account or, a deed if there's a loan on the house. Like, you can't just do that stuff simply. So, that is one misconception I want us to address right now, is like, that might be the end goal, but financial institutions are not held to the requirement to approve you or to follow a regulation that we have to do in the industry in order to satisfy this agreement and mediation. Sure. So you need to know what questions to go ask your financial institution, and know going in that just because that's what y'all agreed on doesn't mean that can magically happen. That might take years. Right.
And I would also say, don't assume, because a lot of times in my experience as a loan officer and also my brief time in collections, post-divorce, we have to call somebody because this bill is not getting paid or this loan is not getting paid. It's like, oh, well, that was their loan.
Right.
Well, both of your names are on the contract.
And
Like
it's still affecting
the
your
loan
credit.
documents. Exactly.
Right.
And
Yeah.
so don't assume these things are happening. You actually have to get in there
Right.
and figure out what's going on.
Yeah, and that is the biggest thing. Just because the judge says it's so, it doesn't make that go away. You still have legwork to do to get that loan out of your name, because if the other party doesn't pay the bills, it's going to affect both your credit. It doesn't just magically go away. And I worked in collections for a long time.
Yeah.
And that was the biggest thing that I would hear was that, well, the judge said that this person is responsible for it, but the next step was never taken to get your name off of that loan.
Because we don't know that.
Debt. Right.
Yeah, we don't know that. We just know there's a loan here that hasn't been paid.
Right. And to be quite honest, at that point, it doesn't matter for the financial institutions what the judge says, because there's a step that has to be taken. Because right now, both parties are responsible until that next step is made.
Yeah. So let's park on that for a second. So if you are, let's say that you're of the side of the party in the contract that it's your car, you're both joint on the loan, you're responsible for paying it. What do? Right. So in this sense, your ex needs to be removed from the loan. Well, you have to refinance that loan. Okay. So that's basically what you're doing. The loan will still need to exist. You just are going to have to refinance it. So you're paying the one loan off with the new one and doing all the new paperwork with the DMV and all of that.
Which means you have to qualify.
Which means you have to qualify. That's what I was getting to. Yeah.
It also
Thank
means
you.
that the loan interest rate might be higher.
Right. It's going to be at
which is
those
a big
current
thing,
rates.
especially for a mortgage right now or a car loan. So you need to take all that into consideration.
That's right. So that's why I was saying if it's an amicable separation and you can continue to still have these conversations with your ex and explain those things and talk about those things, it could certainly, I think, set you both up for success in the future if you can still try to walk that line together for the greater good of each other. And so, gosh, and maybe you're like, I need them to hear this. Send them the link.
Yeah.
Send them the link to this after the webinar and try to come to some, agreement together, because hopefully you want what's best for the other and we can set each other up for success here. Is that kind of what we're getting at?
And you may have the situation where they're not able to get it refinanced. And then that's another conversation that you're
like, what do you do? Right.
What do you do? Because you're jointly responsible for the loan. So then do they sell the house? Do they sell the car? I mean, there's a lot of conversations.
Do you let it go into collections?
Right. Or because if it goes into collections, then it hurts both your credit,
right,
even though the judge said that you weren't responsible. So there's a lot of things to consider with this part of it, because this can make or break your financial well-being just on the loans that you have. So you have to have some tough conversations.
And just like any other crisis scenario in your life, married or unmarried, there are other crisis things that I think can happen sometimes in our lives that bring us to a fork in the road where we have to choose a lesser of two evils sometimes. And that's where working with a financial counselor or a financial planner or even your divorce attorney could help you go, all right, how should we decide this? What should what path should we walk down right now? And just having eyes wide open, knowing that, this choice is probably going to still, because oftentimes I tell people, so what, because people go, well, that's going to hurt my credit score. And I go, well, that's not always a bad thing. Let's take a look at the future. What does the next 2 to 5 years look like? Because if you're set and you don't need to borrow money again, it's okay if your credit takes a little bit of a dip because you have a cushion over here to pay cash for this, or you have a strong budget to help you not rely on credit or need to apply for credit in any way. So, I know that might be an unconventional way to think about it sometimes, but I often say sometimes having your credit dip isn't always a bad thing. And we'll talk at the end here about maybe some things that you can do to offset any negative credit that you might incur. Some tricks actually you can play with the game of FICO to help you try to keep building credit if anything is negative happening.
I always tell people your credit doesn't matter until it matters.
Yeah.
So, I mean, if you're not borrowing money, then
And I have found that with working with members who are post-divorce, credit, it seems to be one of their immediate concerns, but they realize very quickly that it is not the
Right.
most immediate.
Right,
right.
For some, it certainly could be. Again, depending on your stage of life and
Right.
what your goals were.
Mhm.
Maybe you were renting and you didn't own a home and you
Right.
can't afford to make that rent or even mortgage payment on your own.
Mhm.
So I think, again, it just depends on your individual situation. There is truly no one size fits all when it comes to situations like this. So, all right, well, let's move on a little bit more to kind of how we prioritize some of those financial obligations then. So we talked a little bit about shared debts, and we talked a little bit about, we kind of alluded to when another party struggles to make payments. We know in a divorce situation, people intentionally don't make payments to hurt the other person, which is really
happens.
awful.
It does.
Yeah.
But in this case, what advice would you give for managing shared debts when one of the party is struggling? Let's take that conversation we just had and go a little bit deeper. What advice would you maybe give somebody who's experiencing struggling and making some of those payments?
Yeah, the first thing I'd always tell people is to check your credit report. Look at that credit report and see what's going on there, and see what debts on there you're responsible for. Because if it's tied to your social security number, then it's yours, right? If it's on your credit report, then that's a debt that you're responsible for. Now you need to figure out, is that a joint debt? Is that a personal debt? What is that, right? How am I at this stage going to handle this, right? And so looking at, can I afford to pay these debts? Can I, what's going on in my life? So that would be my advice initially. Once the dust is settled, once you're trying to pick up the pieces, check that credit report, figure out what debts you're responsible for. And that's going to give you a roadmap for the plan ahead.
Well, and
of how you're
hopefully
gonna do
that's
that.
certainly a discussion you're having even during your
Yes.
mediation or
Mhm.
your divorce conversations, maybe even before you've signed the dotted line, is kind of talking about those. Because I feel like some of those conversations, and a lot of times too, we think of divorce, we think of like the TV shows where there's couples who are fighting, and I know most of the time it's not as dramatic as it seems to be on TV. However, we've heard of some pretty
Sometimes it is. Yeah.
serious, especially in the collections world.
Right.
You hear a lot and see a lot of what people are really going through in the real world. But hopefully, hopefully you are sitting down and having that conversation and going, just because I drive the car, though, doesn't mean I can afford to keep the car.
Exactly. Yeah.
So the judge might say, or the ex might say, or the attorney might say, well, that's now your problem to figure out.
Mhm.
And we know with the car loans or with a car, depreciation is a very real thing.
Mhm.
And chances are you might not be able to afford that car. And that's where coming up with a solution. What do I do then? Do I need to sell that car, like Kelly mentioned earlier, or
Or do you
second
need to,
job or something like that?
or reach out to your lender and see if they'll modify the loan? And a modification is different than refinancing because you're going to keep the same interest rates, which might be a good thing, especially right now, and see if they're willing to work with you on adjusting the payment to something that you can afford. And going back to the budget, if you've done your budget, you already know really what you can afford. And so you reach out to those. The worst that they can say is no.
Yeah.
But it could be that you can then be able to afford all the things that you need, not necessarily want, but all the things that you need for a stable life after your divorce.
Yeah.
Right. And one thing I'll say is that, as I can't speak for banks, but as a credit union, we really are here for your best interest, right?
Yeah.
We really want to set you up for success. And there's no shame in calling us and asking for help and seeing what we can do. Now, again, we can't do everything. We can't move mountains all the time, but we do have tools that we have access to, that like loan modifications and things like that, that can help you in a situation that you find yourself in. But we can't have that conversation if you don't talk to us, right?
Yes.
Mhm.
And we don't know if you don't tell us. And so making those phone calls, having those conversations is really crucial when you need help.
Yeah, that's really good. So Kelly, question
Yes.
for you. How important is it to separate accounts quickly after a divorce, and what steps should people take? This is a good one. So now we're shifting a little bit from that loan conversation to our day-to-day banking accounts.
Right.
So this is my personal opinion, but I would have another checking account. If you have joint accounts, this is what we're talking about. If you have a joint checking account, open up another account. Maybe even have your direct deposit go to that new account. Don't hide money, but you want to kind of build yourself up for success, and open up your account. keep your joint account open still, because you're going to have joint bills that are due. But that way, because you can't just take your name off of an account.
Right.
If I have an account and Kelly and I are getting a divorce, Kelly and Kelly, I can't just go in and take her name off the account, right? I have to, there's a process involved. So set yourself up for the future. Open up your account, have your regular bills, start paying those out of your personal account. And then once your divorce is finalized, hopefully you guys, like Kelly had mentioned earlier, that you're still getting along amicably.
That's it.
You're getting along great. And you guys can go in together. You guys can go in together and close that account and then move forward.
Yeah.
But it's very important to have your own account set up. Don't wait until after it's done, because you're already stressed out. Things are very emotional for you at that point, and you want to try and make things as easy on yourself as possible.
No, and I do know, I could be wrong, but I do know doing this topic too, or really had us asking prompting questions that maybe we haven't experienced before, or because we're not experts I'm not a divorce attorney, so I don't know some of the law. Be sure to, this is one of those things that makes me think about, I think too, when certain things are filed, you're at a certain stage where things cannot and should not happen. You're saying, when you said don't hide money, I think that means there are certain things that you kind of have a freeze. I'm not allowed to do anything until this is over. It's very similar to kind of like when a bankruptcy happens. There are certain things you cannot or aren't allowed to do, but I think sure, but I think that that's based on what is agreed upon. So that is a question you probably want to go back and ask your attorney, is say, what are there any things that I am not allowed to do? Am I allowed to go ahead and open up the other bank account? And can I go ahead and start having my direct deposit go in there? It could even be when you've got alimony or child support and all that kind of stuff. Those are questions where you need to go ask your attorneys those questions so that we can make sure you're doing everything right, because we certainly know you don't want a bigger target on your back,
exactly.
And create a bigger wedge between you and your ex.
And divorce attorneys will send your financial institutions documents that we have to fill out, showing them what your accounts look like. So if you're trying to open up another account to divert money so that they don't see that you have that money, they're going to find out. They're going to find out. So don't even do that, because then they're watching you even closer.
Mm-hmm.
Just do the right thing, ask the questions like Kelly said, and then follow their guidelines.
Yeah.
Can I re-emphasize this earlier point that you made about closing accounts? Because that is such a common misconception that I've heard and I've experienced is, well, I just want to get off this account, or I just want to get them off of my account. It doesn't work like that. And I think we mentioned it a couple of times, but both parties have to agree and sign for one to be removed from the account, right?
Mm-hmm.
So you can't just say, I don't want them on my account, or I don't want to be on that account. Both parties have to be a part of that.
Right. And so that is where you need that when we're talking about having an open conversation. If you are being asked to remove yourself from their account that they're going to keep, that y'all have to be in agreement with that. And so you're holding them back when you don't comply to that, but also there might be a reason why you shouldn't comply too. I mean, they might still be trying to hide something from you that's going there, and y'all haven't worked that out yet.
Right. So
those things might need to be put to bed, so to speak, and done with before you can go in and take your name off of the account. Because once your name is off the account, you have no eyes or ears into that. But again, if it's theirs and they've done everything that they committed to, and they've separated those monies, and it is truly their money, comply, play nice, get your name off the account, and go focus on rebuilding your own financial, future. So
on the other side of that, something that just came to mind, if both parties' names are on the account, it's both y'all's money. So the other person
still has access to it,
which is whatever they please.
Yep. So, which is scary.
Yeah.
Yep. Okay. And the other things I wanted to mention in this, another prioritization I think that folks sometimes forget about until it's tax season, is how their deductions should be coming out of their paychecks. So that's something you want to change immediately with your employer. So I would encourage you to modify your W-2 with your employer. And then ask yourself, some families or households need to ask themselves, do you like having a big tax return at the end of the year? Or would you rather them withhold less throughout the year so that you don't have as big of a return, so you have more income to operate your household off of? So this might be a really good time to look at that. And I will tell you, the IRS has a really cool withholding calculator or survey tool that you can use. So if you just go, it's called a tax withholding estimator. I don't think I shared this with you guys. But if you just go to irs.gov and type in tax withholding estimator or tax withholdings, there's a guide to help you know what you should be withdrawing or having withheld based on your situation. The other thing that came to mind too is your dependents. Who's claiming dependents on the tax return next year? Right. That is a big. Huge. I can't tell you how many times I've talked to people who realized that their ex claimed the dependent and it was their year to do it. Usually that stuff is an agreement in your divorce decree. You alternate that, and you can kind of get in big trouble in the court. Like, you could probably take someone to court for that and go, buddy, you claimed them, you owe me now. Right. So that can get really messy. So talk about that. If you haven't talked about, again, I think it's going to be something that should be talked about during your divorce process if you're working with attorneys. But if you're not working with attorneys and it's a more of amicable split, you need to talk about that with one another. Who's claiming the children? Are you splitting them? Are you alternating years? Those seem to be the common methods that we see. Is there anything anybody wants to add to that?
Yeah. And if you're alternating years, make sure that you're adjusting your W-2 appropriately, because you don't want to end up the year that you're not claiming the children. You don't want to end up owing a bunch of money because you didn't get to do that.
Yep. Yeah. Great point.
So it sounds like a lot of work because you're like, oh gosh, but just think of it's tax season. When you do that tax return, go right to your HR office, grab that W-2 and update it as soon as you can. And then of course, prioritizing any living expenses, health insurance, or legal fees as well into that budget that we talked about. Health insurance, I think, would be a big one, because I think people think they need to wait until, open enrollment period. And again, you might have an amicable situation. I know that seems to be the word of the day, amicable. Amicable. We hope that for you. That is that's where the hope part comes in. It's an amicable situation. Yeah. It's spelling bee season for us. And we're talking about spelling bee. Don't spell. I can use it in a sentence, but I can certainly not spell it for you. But yeah, if it's, a friendly, open discussion that y'all can have together, then certainly talk about that. If you're willing to keep the other one on your insurance and cover the cost, like reimburse them for the cost of having you on there. If you can work something out, great. If not, then it is a qualifying event. So you need to go see your HR director so that you can ensure that everybody is covered on their insurance. So the other one to make sure of, and I am jumping ahead, so we're going to hold off on this. Sorry. Okay. So we talked about rebuilding, or we talked a little bit about the credit effects, right? And then our bank accounts, how that kind of affects us. Let me toss a few questions to you guys to get you talking a little bit more about how we rebuild from some of that. So Andre, question for you. For those who do experience a dip in their credit scores, and you even said, your response earlier was check your credit report. So this is a good question for you. So for those who do experience a dip in their credit score after or even during the divorce process, what are some practical ways that they can start rebuilding that credit?
Well, the good news is it's true for pretty much anybody. So we have banks, credit unions, especially credit unions, have tools to help you rebuild and build credit pretty much from scratch, or even if you're at a low point. So things like secured loans are very, very great tools for starting credit. You're basically borrowing your own money, not to get into the weeds too much, but it's a loan that doesn't require
underwriting
approval. You're borrowing your own funds basically, and you're just automatically approved. So that's a way to pay on that loan consistently and then rebuild your credit like that. Even a low balance credit card would help you if you're able to qualify. But different tools like that would really help you to start over. But the number one thing is pay your bills on time every time. On time every time. A missed payment is just going to make your situation worse. And so whatever you can do to avoid a missed payment is going to really help you with your credit score going forward.
Yeah, that's really good. Kelly, do you have anything to add to that?
Let me just
bounce you a question.
Sure. So another thing is, if you know you're not going to be able to make that payment, reach out and talk to somebody, because there's things like modifications and different things that can be done. I know I said this before, but the worst they can say is no. And most likely they're going to try and help you, especially if they know the situation that you're in. So reach out to somebody, talk to somebody, making your payments on time and keeping those credit cards below 50% of the available balance. And that's 65% of your credit score. So if you're just doing those two simple things, you're going to start building your credit right then.
Sure.
I mean, it's
That's
going to
right.
it doesn't happen overnight, but it didn't happen overnight. So give yourself a little grace and be patient with yourself, and you'll build your credit back up.
Yeah.
And I'll also add, don't try to dig out the hole by making the hole bigger. And I say that by saying, don't take out more credit trying to fix your credit at this point and at this stage, because it's just going to cause a vicious cycle. And to piggyback on what Kelly said a little bit is, we don't want to repossess your car. Like,
no, we don't want it.
It costs us money to do that, right?
Yes.
And we're not going to recoup those funds. Let's just be honest with you. So calling us before you miss that payment is so crucial. Again, the worst we can say is no.
Yeah, I hope I'm not going to tell any stories, but I used to sit across the cubicle from Kelly years ago before we were working together in this department. Our offices were nearby each other. And that was when she was in our member solutions department, which is what we call our collections team, because that is what we hope to do, is find solutions for our members. Like Andre said, we don't want to take your car. We don't want to collect your car. Right? So we want to find solutions for you. So I heard numerous conversations, and I have to say, Kelly, I learned a lot about I came from the front line, so it's not like I was, I don't know, naive to the experiences that our members were having, but seeing some of the real conversations, like, well, I would hear Kelly say, well, how would I know that? We've been trying to call you for 4 months and you don't call us back, and I think it's because, we are, as humans, right? We are an avoider of the uncomfortable.
Sure.
But also sometimes I think when we talk about money personas in our kids' classes, we talk about the avoiding ostrich that just sticks its head in the sand to try to avoid it, or the pile of bills that are sitting on the counter, or the mail in general that you just don't want to open, right? Or you don't want to deal with right now, or it's stuck in a drawer hidden somewhere. I think sometimes when we find ourselves in these crisis moments like this is when that is even magnified, like not those abilities, but those reactions, like, really run, like, we just clutch on to those, right? Because it's like, I don't want to deal with this right now.
Right.
Like, avoidance factor.
Yeah.
But it's not until their car is repossessed that they go, I can't believe you took my car away from me. I'm in the middle of ABC situation. And Kelly used to always say, all you had to do was call us. And even her voicemails she would leave with people are, we want to work out a solution for you, but the clock is ticking. There are legal steps and processes and timelines that we have to follow as a financial institution. And we can bend or stretch sometimes, but if you don't call us and talk to us, we can't help you. Right. It's just anything else in life. You don't know what you don't know.
Right.
So we don't know what we don't know about our members. And I know it's your business. It's your situation. It's heightened emotions. It's very stressful. And we know that there's a series of things that have to follow, right? That kind of create this domino effect when it comes to a crisis like divorce. So we get that, but just call us and talk to us about it. Our member solutions team is there to help, whether it's us or any other collections department, I work with I work with members often who go, so what should I do when these people call me? The credit card collections or whatever, when we're going through a financial counseling, for some members, it's a very long time. I'm working with them for months, even a year. I have one right now that I've been working with for a whole year. And it's like, again, you have to pick and choose those battles. Who do I avoid? Okay. Don't avoid your primary financial institution or where you have your what we call your essentials loans, like your auto, your home, like a roof over your head, those sort of things. Don't avoid. I'm not saying avoid the others either, but you do have to prioritize. That's right. And getting back to something you said earlier, you said just pay on time, and that sounds simple, but we also know that many of you won't be able to pay on time. Sure. And so when you find yourself in that spot where you can't pay on time, that's when we have a income and how many days are in the month
Yes.
problem. That's where we
Yes.
have do we have too much month and not enough money? Or do we have an overspending problem? And then the other thing that really stood out to me too was this is also a really good time for people to fall victim to racking up the credit cards. That becomes their emergency plan. And that should not be your emergency plan, right? Because that's just going to dig that hole he's talking about deeper and deeper and deeper. And it's going to take a much longer rope to help pull you out of that one.
That's right.
So, again, that's why we start with, nobody likes to say the B word, budgeting, right? It stresses us out. I like to, a friend reminded me recently, she doesn't call it a budget. She calls it a spending plan. It's like, because it's true. It's really just having a plan for everything you expect to spend that you make. So those were just a couple things I wanted to reiterate to you guys. So that's really good.
So, we talked about emergencies coming up and putting it on your credit cards. But instead of that, you should plan to have an emergency fund. And with all the stuff going on in your life with the divorce and all the finance and everything, make that a priority. And it doesn't have to be hundreds of dollars, but make it a priority. Pay yourself first. Because when something happens and you find yourself with an emergency, and an emergency is a true emergency, like a tire popped, or not because you saw a bag and it's on sale, right? But a true emergency that you're going to take care of yourself. You're putting yourself first by putting money aside for those emergencies, because you're not going to be paying interest on it. You're not going to have to worry about where that money's coming from and how you're going to do it, because you've paid yourself first. You've put yourself first and you've made it a priority, because that's making yourself a priority, at least in my opinion. And again, it can be $20 a paycheck. It can be $50 a paycheck. It just depends on what your budget allows for.
That's right.
And if your budget is a negative when you get done, look and try and refigure your budget. Take out some of those things that you may feel like you deserve, especially going through everything that you went through, but you deserve to be good to yourself and make sure that you're taking care of yourself, and that you're paying for those things that that you're going to need, and not something that's going to be instant gratification, like going out to a fancy dinner or buying that new purse or things like that end up on the floor anyway.
Yeah.
The peace really of mind that comes with going through an emergency, a financial emergency, like having to replace tires on your vehicle. I've had to replace 3 tires at once before, and it's not fun. But having to go through that and not having to adjust your lifestyle, is the peace of mind with that is just incredible. Yes. And having that emergency fund, I wouldn't have been able to do that without an emergency fund. Yeah. And so that's so important.
Yeah, I often talk to folks post-divorce who are like, I wish we would have. Like, but, and then I think a lot of people say, well, we probably wouldn't have been fighting about that situation in our life about money management had we done those things. And sure, you can sit there and dwell, and hindsight's 2020, but I'm hopeful that you learn so much from this, and that you can grow, and knowledge is power, and that you are really equipped to conquer the future, right? Because what mistakes you won't make again, right? Right? That's just being a wise person, is learning from our mistakes and our situations. But then also, living it out for kids to see, and helping others around you who might walk that same journey, that you might be able to say, hey, this is something I learned. Let me pass this on to you. And that makes the world a better place.
Yeah. And, a lot of times we talk about, well, we need this for the kids. The kids can adjust.
Yeah.
You don't need to be
okay.
If you can't afford the big fancy house, or even the moderate size house that you have, and you can't afford it, your kids will adjust to living in a smaller house or in an apartment. They're going to see you doing what needs to be done to get to the next level.
Yeah. And, this isn't necessarily something we worked into the discussion, but I think, oftentimes when we're talking to families about money management, and depending on the ages of your kids, this could be a really good opportunity for you to be a little bit more transparent.
Sure.
And teach them some things about money management. I think oftentimes we try to look like we've got it all together, right? And that we're holding that ideal view that we think our kids have of us as being super mom and super dad. But I think these are really good opportunities for you to have some good conversations with your kids about real life.
Sure.
And doing it in a way that is respectful of your ex, of course, that still honors that person, but also, you can have some serious conversations with your kids about maybe why life is changing right now financially, like why I can or can't do that for you,
Right.
because this is the goal. So that kid is kind of bought into it. Again, depends on their age. I'm not saying that a 4-year-old's going to get that.
Exactly,
Age appropriate.
But you might have, a middle schooler or a high schooler that I can certainly have a different conversation with my 16-year-old son about money that I cannot have with my 7-year-old daughter who has absolutely no idea, what I'm talking about in a certain area. So, just be mindful of that and don't be afraid to still have some of those tough discussions with your kiddos about the financial impact that you're going through as well, because I think it really can help shape them into incredible adults who hopefully can make some really good sound decisions within their own money management as they grow up.
Yeah, because divorce is not, of course, the financial part is a piece of it, but it is a piece of it. Like there's so much emotional things going on during this tough time. And so seeking counseling if you can afford it, just personal counseling, therapy, seeking financial counseling, which we offer here at Envision for free, whether you're a member or not. We offer those services. Getting support from wherever you can get it during this time will really, really, really help you moving forward.
Yeah, this is good. All right. So as we wrap up, I want to bring us to talking a little bit more about the future. So I just want to spend 5 minutes or so talking about tossing you guys a few more questions. So Andre, for you, how should someone go about revisiting their retirement plans and adjusting for their new financial future when we're talking about that sort of thing, retirement, the future? Because we know now that looks a little different.
Well, right. Retirement's different now, right? It's not, you're not retiring for your entire family. You're retiring, depending on the situation, either for yourself as an individual or for yourself and your kids, or you're factoring your kids in, or whatever it may be. You're going to have to revisit those plans. Can I pay as much as I was paying before into retirement? Do I want to stay regressive? Like, what is your age at this stage? Because that affects a lot of things. What does your 401k look like? You're really going to have to take a good look at what your plans look like. And then what do I want my life to look like in retirement now that I'm a single individual versus when I was a married individual? And so just really not taking that stuff for granted, because retirement is one of those things we put in the back of our mind. It's like we don't really worry about it until later. But when you're going through this crucial part of your life, you really have to think about what does my future look like at this point now that things are different. Yeah,
if it stayed this way, certainly for a long time. Because, who knows, you might remarry one day and you might be back in a two income household, and you might be able to contribute a little bit more to a 401k in the future. But yeah, to your point, reassessing and having a realistic view on that. I think the other thing to that too is adjusting your beneficiaries. That might be another document that you need to update post-divorce. You might want to go in and, add a different beneficiary. Maybe you want to change the kids to be primary now as beneficiary and remove your ex as beneficiary if you so choose. The question I have for you, Kelly, is we're going to talk about estates just a little bit, because we touched on mortgages. So I want to make sure that we bring that one home. No pun intended. What are the most important estate planning documents that people should consider revising after divorce?
So number one, your will. Make sure you're changing that will unless you really do love your ex,
right?
Because he or she will be the ones that get everything. So update your will and make sure to file it appropriately. Update your living trust if you have one. Kelly, you mentioned earlier about beneficiaries. Make sure that you go through your documents and update all your beneficiaries. And if your children are minors, you're going to have to designate somebody to be in control of those funds for them until they're 18. So make sure that you have that information listed on your life insurance policy, your retirement accounts. If you have CDs, anything that you have that's got any kind of financial monies attached to, you're going to want to make sure that you have the beneficiaries updated. So,
and most people probably don't even realize that beneficiaries is even an option for the regular day-to-day banking accounts and things like that. So some of you, if you're watching this and you're not experiencing a split right now, you still need to make sure you're updated. So sometimes it might be a parent that's passed on already, or a sibling that maybe isn't. Everyone needs to update their beneficiaries on a regular basis. I always like to tell people, if you've got a living will, that's great, but the beneficiary thing makes things so much easier when you're trying to go to dissolve some of your accounts and things like that so that you don't have to necessarily wait for that whole estate process to go through or what have you. So,
and this is something you didn't ask me about, but speaking about the life insurance policies and retirement plans, make sure you know the passwords. Make sure that you have all that information, that you have a list, because you'll be surprised on how many little things that you may have. You may have a life insurance policy. You may have your retirement plan through work. You may have another one independently. And you need to know, if you're not the person that's been in control of those accounts, in my household, I am not the person that handles all of the investments. So I know where those passwords are, but I haven't gone out. So if something were to happen, those would be things that I would make sure that I had.
That's a really good point.
Yeah.
I'm glad you brought that up, because that also made me think about just your everyday to day accounts.
Yeah.
Yes.
You need, if your ex is no longer on your account, which the way our account access works is by the individual anyway. So the individual has logins and things like that, but you might need to change your passwords, right?
Sure.
So, and then you might need to provide passwords that the other person needs access to in order to be able to square some things away. So again, has to be something you guys got to talk about, some of those tough discussions, but just some things to be thinking about so that you can get to what you need to get to when you need to get to it, and try to do that sooner rather than later. Usually you're right. It's an afterthought and someone's like, oh crap, what's my password? Right. I mean, we find ourselves in those situations all the time.
Yeah.
Very good. So I think we're going to go ahead and wrap it up. We've talked a lot about we know that the emotional toll, right, that can oftentimes, a split can certainly bring, and makes you feel unstable, but we're hopeful that some of the things we talked about today, and again, we didn't even talk about everything that we wanted to or could have. We just kind of talked about some highlights and some common, themes that I think we see through divorce. But, I think what we really want to reiterate is that you are just being proactive in your planning. Excuse me, let me take a sip of water here. Thank you. That you're being proactive and really trying to create that spending plan, that budget, the B word. It sounds like I hate doing the budget myself. So I feel really uncomfortable when I tell people they should do it. But as a financial counselor, there's so many benefits from having a plan. There's no surprises. Like nothing surprises you when that happens, except for the unexpected things like the 3 blown tires. But if you've got the emergency fund set up for that, or if you expected that, it's still not really a surprise.
Right.
But you know what? There's something freeing about writing it down, and at least you see it and you know. Like,
Sure.
And what I think is interesting, I don't think any of us here enjoy doing budgets.
No.
Like, so me neither. So it's like, but we see the value in it. Is kind of the point. Like, now that we have one, or we live by, even if it's a loose budget, we still see the value in it.
Yeah. And I can tell you, like, if you have a very advantageous goal ahead of you, or again, you're walking through crisis, having that budget can be so freeing. And so it's the one thing in your life you feel like you do have control over.
Yes.
Right.
It's like, I get to say when and where my money is going to go versus me spiraling out of control in, the abyss and not really sure how to rein it all in. So that is certainly good. I can tell you the years that Tim and I, my husband, have a big goal or project, that we are so good about sticking to a budget because we're motivated to accomplish this goal. I think some of the problems with budgeting is when you don't really have a goal in mind and you're just living your life.
Right.
You can often, that's where lifestyle creep kind of it really does creep up on you, because you're like, well, dang, like where did all that money go? Right. Or what do I have to show for that balance on the credit card or what have you? So, okay. Well, thank you guys very much for your thoughts today on the topic. I do want to invite everybody back in 1 month. We will be doing our November webinar topic, which is on festive finances. And in that webinar, we're going to be getting ready for the holiday season. Woo! Can you believe it? How are we talking Christmas and holiday time already?
43 days till Thanksgiving.
What?
I looked it up yesterday. Yes.
So as the most wonderful and expensive time of the year approaches, we're going to discuss in our November webinar some smart strategies for managing your spending. This is when that budgeting comes into play, when we can create a plan for buying gifts, planning for holiday gatherings without breaking the bank. And in this session, we're hoping that you will enjoy planning for the festivities without the financial stress that often comes along with it. I will tell you, I can't speak for y'all, but I think our financial counseling requests increased dramatically in January.
Yes.
Yep.
And it's always because people are feeling the stretch from the holiday season. And so if you want to avoid having to speak with a counselor over that, we're hoping that you'll join us and make your season merry, bright, and budget friendly. So we will see you guys in November. Thanks for joining us.
Thanks.
Bye.
Bye.